Good afternoon, and thank you for joining us today. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities. Today's webinar features Lifezone Metals, which is advancing its flagship Kabanga Nickel Project in Tanzania. It is believed to be one of the world's largest and highest grade undeveloped nickel sulfide deposits, hosting over about 3.2 billion pounds of nickel equivalent at 2.61%. It has developed hydromet technology, which removes the need for smelting in the refining process, thus reducing emissions and energy requirements. And it has also partnered with Glencore to demonstrate that hydromet technology can process and recover PGM metals from responsibly sourced dense automotive catalytic converters in a cleaner and more efficient way. Today, I have with me on the webinar Chris Showalter, the Chief Executive Officer and Director, and Evan Young, the Senior Vice President of Investor Relations and Capital Markets at Lifezone Metals. The format of today's webinar will be comprised of two parts. In the first part, Chris will provide an introduction to Lifezone and outline what investors have to look forward to through 2024 and into the new year. And then in the second part, we'll take your questions live. So please send us your questions using the chat, and we'll get to as many as we can. I'll note that you can type them in at any point throughout the presentation. So to start, we'll handle the disclosures and then get into the presentation. So for Lifezone Metals, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Lifezone corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Lifezone-specific disclosures. So with that out of the way, I'll turn it over to Chris to walk you through the presentation for Lifezone and tell you what you have to look forward to with the company.
Excellent. Thank you. Thanks for having us today, and good afternoon to everyone on the line. So I will kick off. So Lifezone Metals, by way of introduction, we are a really what we like to describe as kind of a supply chain solution for cleaner metals. And what that really means is we're in the business of providing solutions to the mining industry to clean up the supply chain by removing what we see as really the dirtiest component of the supply chain, which is that smelting, high intensity energy, high CO2 footprint. And that's really the core focus for us as a company. And we're doing that in two key flagship projects. And this is where we're implementing our hydromet know-how and technology. I mean, really, at our core, we're hydrometallurgists who have been commercializing and applying that know-how to mining projects and recycling projects in order to minimize the overall sustainability impact for these operations. So number one, we have our large Kabanga Nickel Project in Tanzania, where we're partnered with BHP. And then we have with Glencore in partnership in the US, we have an autocatalytic recycling project to recover platinum, palladium, and rhodium from spent autocats. What we're doing is really demonstrating with two of the 5 largest mining companies in the world our capability, our expertise of this hydrometallurgy. And I think that's, when you come to the market and you want to really break out and commercialize, to do it with 2 leading partners, that's a very strong demonstration of the potential of Lifezone. And we're really thrilled to have those 2 as our key strategic partners going forward. So first question we get a lot, what is hydrometallurgy? What are the benefits and why is this a alternative for lower energy intensity and cleaner emissions? So simply by removing the smelting step, which fundamentally is at the core of what we're doing with hydrometallurgy application, we go through really by removing that energy intensity step, the smelting step, and removing that and basically replacing that with cleaner water-based hydrometallurgy. That lowers capital and operating expenses by the energy intensity, first and foremost. So the lower emissions are really driven by, we don't have a smokestack. We're not using big blast furnaces. We're not emitting high levels of energy intensity. So much lower energy use is a big driver of that. And this is something where rather than shipping to places in the world where smelters exist, we're able to do localized hydrometallurgy you minimize transport, you minimize the effects of transport and the carbon emissions that logistics chain has, but you're also empowering local governments and local entities to beneficiate domestically. So you keep value addition at the local level, which is a critical part of how we provide benefits to local host communities and governments. A bit about the Kabanga Nickel Project. So this is a nickel deposit that's been known for quite some time. This is in Western Tanzania. We call this one of the most advanced development-ready projects, and that's very important because we have all the special mining licenses, we have all the core permitting for the project regarding environmental licensing, and what we've been able to do is really mobilize a number of key stakeholders behind this project, and we'll talk about that a little bit more. But what we've announced over the past several weeks and months is bringing in new stakeholders to the project in addition to BHP. So bringing in BHP, this is the first project BHP has endeavored to partner on in Africa for over a decade. It's a big demonstration of their commitment to future-facing metals, and for them to come in to Africa and come in through Tanzania and the Kabanga Nickel Project. This is a very important project for BHP to demonstrate their entry into emerging markets as they look to grow their portfolio of future-facing metals. In addition to BHP, we've mobilized the support of the U.S. Development Finance Corporation. That has led to additional announcements, not only on political risk insurance from the USDFC, but also on the corporate finance side by bringing them into the project finance announcement that we will have SocGen leading that process. So that then in turn led to the support of JOGMEC. So last week we announced that we have signed an MOU with JOGMEC, which is really the Japanese government's mobilizing entity for Japanese industrial companies to secure battery metals. So that was a very key announcement, and it gives a direction of how we're looking to mobilize additional off-takers and consumers of the metals from additional strategic stakeholders in various parts of the world. Okay. So the Kabanga project, it's been incredibly well known for a very long time. There's been a number of shareholders that have owned the asset in any given year. Now, what we always say and what people will always talk about is the exceptional grade and ore body that exists at Kabanga, and that's represented here on this chart. The Kabanga nickel deposit really being in that exceptional class of over 2% nickel, and I think when you compare it to what we call down at the bottom, kind of the one percenters, and when you look at globally where nickel projects are positioned to be commercially viable, a lot of these one percenters are not commercially viable at current nickel prices. You have a lot of supply coming from Indonesia. You have supply out of Russia. Indonesia is one of the dirtiest sources. No one's going to take Russian nickel given the alternatives now. So Kabanga is really one of the very, very few commercially viable development-ready projects that will provide an alternative for manufacturers that are looking for a cleaner, single-sourced location of battery metals like nickel, copper, and cobalt. So just a quick bit about our partnership with BHP. So BHP has invested a total of $100 million into $10 million into Lifezone, $90 million into the Kabanga Nickel Project, and they have a pathway to acquire up to 60%. So this is represented on the next slide, where upon the conclusion of the definitive feasibility study, BHP has an option to elect to go from 17 to 60%. And that is at an agreed formula, an agreed process through an investment agreement. So this is very, very key, because this is the pathway for BHP, like most majors, to acquire majority controlling stake in the project. And it's very well defined from a quantitative standpoint in terms of the valuation metrics. So investors can very clearly see the value that would be achieved in Lifezone's, essentially in our stock, in our share price, when you look at various value drivers and you put in certain assumptions in terms of price, et cetera. For BHP to go from 17 to 60% at the agreed formula, we think is an exceptional equity story, because we have a defined, mapped out pathway for BHP to acquire the majority stake, and that can translate into a really simple back of the envelope valuation for investors. So we talked about Kabanga. We talked really about the exceptional grade. So that puts Kabanga firmly in the first quartile in terms of low cost. And when you look at our all-in sustaining costs, you want to be down that lower left. And when you look at the oversupply coming from Indonesia, and you look at insulating yourself through these cyclical shocks in nickel prices, this is putting Kabanga in that category of being economically viable at current prices. So that's, for us to be able to bring a project online and provide an alternative, this is where grade's king. And the all-in sustaining cost will be updated when we come out with our definitive feasibility study, but we're very confident that the economic drivers that put Kabanga in a position to be a highly competitive nickel project to compete with Indonesia, that there's going to be very, very few of these projects, and Kabanga will be the next one to come online. This is really the chart that accentuates the dramatic difference between the CO2 emissions between Indonesia and a mine like Kabanga. So by applying clean hydrometallurgy, by localizing and going from mine to final refined metal in one location, removing all the logistics and transport cost, all the implications of your CO2 footprint. And then when you look at the methodology of mining in Indonesia, which is quite well known, and there's a lot of attention on how destructive of a process that is. I mean, you're clear cutting rainforests, you're depositing your tailings in the ocean, you're using coal-fired power to do that. It is really, really as bad as it gets. A lot of the lower grade ore coming out of Indonesia, it goes through a multiple smelting process to upgrade the nickel pig iron all the way up to class 1, and that is incredibly energy intensive. So you do see some very, very high CO2 emissions coming out of Indonesia. And the battery metals market, they don't have a lot of choice, because this is where you're seeing all the new supply. The unfortunate point of the cycle right now for nickel is the new supply coming online is coming from Indonesia, and that has obviously very dramatic CO2 costs, whereas the selection of cleaner sources of nickel are very, very few, and that puts Kabanga in an exceptional position to be one of the highly preferential sources of battery metals coming online in the coming years. I mentioned that we're getting a number of announcements and highlights coming from the U.S. government recently, and this is pretty exciting for us, because the U.S. government has taken a very vested interest in securing battery supply chain security, specifically in Africa. And you've seen them do a number of announcements. The Libido Corridor is a large railway project that they're supporting. That goes from the Copper Belt through into Angola. And then there's a vision now to go eastward through Tanzania. So it's mobilizing the momentum and seriousness of the U.S. government to open up this brand new artery of infrastructure through the middle of the continent. That's very much to the benefit of projects like Kabanga, that will be able to really rely on this infrastructure as an additional mechanism to make the project economics enhanced. So the Mineral Security Partnership is the collective through which a number of Western countries have formed to work together to ensure that these metals are going to their respective companies. And we are one of the flagship projects within the Mineral Security Partnership. We have support from the U.S. Development Finance Corporation. As I mentioned, that's for political risk insurance, and we're also going through the project finance aspect. And we have a lot of support from the Tanzanian government. So this is just a quick map of the amount of infrastructure that's gone into Tanzania has been a critical driver to really unlock the Kabanga project over the past several years. One of the constraints of power was a major factor in the previous owners not being able to really unlock and developed the Kabanga project. So what do we have now? We basically now have a brand new hydroelectric dam in the northwest of the country that is now connected to a new modern grid line that goes about 80 kilometers past the mine site. So we'll be able to tap into grid power from day one. That is something the previous owners never had. In addition, we have a brand new modern standard gauge rail that's being built across the country. And this is part of a sprawling rail system going into the center of Africa, to really connecting to the copper belt, which will open up this whole entire logistical support to get new sources of battery metals developed, and then providing them a logistical pathway to the port in Dar es Salaam, which is being upgraded. So Tanzania has really put itself as kind of a hub of infrastructure that will tap into all these stranded battery metals deposits and give them that underlying infrastructure capability to become developed, which is really one of the big focus areas for the U.S. government. That's why you're seeing the U.S. government come in and try to support this enabling infrastructure. So Kabanga, it's amazing how much has been invested in Kabanga. And so that first headline, where over 400 million has been invested in over 620 kilometers of drilling. And this is such a well drilled out, well-defined resource. And the good thing is there's quite a lot more there that we need to do. So just one small example of this, that the pink extension, that kind of analogous ore body on the right, we call the Safari Zone. This is just an extension of the second large ore body, Tembo, that was really just left. It was never finished. So we have a number of extensions of current ore bodies. We have additional tonnage at depth in the Kima Zone, and we have two other target ore bodies that have not been drilled out within our special mining licenses. So not only is Kabanga an exceptional high-grade ore body, there's a lot more exploration potential just on our existing license. In addition to that, we have we have another 4 prospecting licenses that we've targeted for additional exploration. So what Kabanga is doing is unlocking a brand new nickel district throughout this Kabaran complex. It's basically a formation in the Rift Valley, spreading from really Burundi, Tanzania into Rwanda, Uganda. This is a well-known nickel district, but by unlocking the Kabanga project, it's going to lead to a lot more exploration in this entire region. And we think this is one of the potential places where the entire alternative to Indonesia is really going to come of age. Okay, so just a snapshot of our process. So we like to call kind of our hydromet flow sheet for Kabanga. It's a vanilla base metals flow sheet. It's based on existing unit operations that are done commercially at scale. And what we've done is really resequenced a number of these unit operations. We will produce a high-grade concentrate from the mine site that will go into an autoclave, which is really that pressure oxidation step, which is a giant pressure cooker essentially. And that will lead into solvent extraction, and then we go into a series of electrowinning where we separate copper, cobalt, and nickel through traditional electrowinning. So these are really the 4 major unit operations, and I think we show it on the next slide where we've been able to on the left. So these, as part of the DFS process, we have piloted successfully, and we have produced and delivered the first LME grade metals at Kabanga. And so you're seeing a snapshot of the cathode and cobalt rounds that we produced, evidencing our process and the applicability to produce refined metals from the Kabanga deposit. So on the right here, what you're seeing is we had a unique situation where we were able to take over an existing mining operation through an established special economic zone that was a former Barrick Gold mine site called Buzwagi. Buzwagi had gone into mine closing. It basically got to end of life. But we negotiated with the government, and a part of Barrick's mine closing process is they committed to setting up the entire mining zone or footprint into a special economic zone that would enable continued activity in the region. So for us, that puts us in a situation where we basically step into installed power, airstrip, it's right on a logistical hub, and we have all the labor force that used to work for the gold mine. Really, we can replicate the economic activity in the region. So politically, an incredibly well-received, receptive process where one mine goes into mine closing, and then we bring in a whole new project and opportunity to maintain economic stability in the region. So that was a really, really nice series of events that led to us being the first to occupy this special economic zone. And that comes with a number of fiscal incentives, including a 10-year tax holiday. So really adds to the robustness of the economics of the project. So we indicated in the first opening slide that we have two flagship projects, the Kabanga Nickel Project with BHP, but then we're also working with Glencore. And what we've done is we've identified the ability to take some of our core patented technology. So our expertise in hydrometallurgy, we have just over 100 global patents. The bulk of those patents are focused on PGM and gold. So a lot of the initial R&D and a lot of the initial piloting and work we've done is in the PGM space. And with the challenges in the PGM market, especially in the mines in South Africa, we had pivoted our focus to look at applying that know-how that we've spent on a PGM hydromet facility in South Africa. And we've been able to strategically apply that know-how to the recycling sector in North America. And what we're going to be doing with Glencore is really fitting into what is their core focus right now, which is above ground recycling. And for us to partner with them, really compatible initiative. And we are going to be looking at recycling spent autocats, but doing that in a way that isn't just the dirty recycling method. So this is one of the conundrums with recycling, where if you're going to take dirty autocats and you're going to throw them into existing smelters, you're just compounding the problem. You are just, increasing the CO2 footprint of that recycled metal over time. So if you're going to really adhere to this thesis of a true circular supply chain and doing that in a clean, sustainable way, your processes have to be clean, and you have to lower the overall CO2 emission from that entire process. So that's something we've been able to identify, and I think this is going to be a great story for the recycling market in the U.S., because we're able to, in a clean processing, keep the actual metals domestically here in the U.S. And so a lot of these metals get sent overseas for final refining in the smelting step. We will be able to get to final refined metal here in the U.S. And that has potentially IRA benefits and a number of other premiums for that product, because it's going to be clean. So the U.S. jewelry industry, Tiffany's, Pandora, they're publicly out there willing to pay premiums for this product. So it's another thing we really like about this market, is the ability to have an established green premium. And we think we're going to be the ones with the highest credentialized product to earn that premium. So where are we with the project with Glencore? Right now, we're in the piloting phase. We're looking to get through to FID by end of this year. What's amazing about this whole opportunity is if you're going to build a brand new mine in South Africa to produce over 100,000 ounces of 3PGE, you're going to be spending close to $1 billion. For just around, approximately 20 million, we will be able to produce over 100,000 ounces through recycling of autocatalytic converters. So this is where the combination of bringing in Glencore, bringing in their balance sheet, and their marketing expertise, this is a really nice fit for us. So it's something we're quite excited about. And what we don't want is to just build one plant. We get this up, we get this operating, demonstrate the commercial viability, then we're in this for a dozen plants in the future. So we have the scale to really ramp this up considerably, and that's a huge addressable opportunity for us as a company. Okay, then so we've highlighted we have BHP as a partner. We have Glencore. We raised previously this year. We did a $50 million placement, which we announced through a convertible debenture. We were very excited to bring in that capital raise. It was led by Harry Lundin and Rick Rule. So really two high-profile investors in the market, and so really happy to bring them in as shareholders. Three of our key institutional shareholders, Synctive, Grantham Mayo, BlackRock, all big participants in the PIPE capital raise from our initial listing in July last year. And then, as we mentioned, we're bringing in new stakeholders through the Japanese organization JOGMEC, and then also through the U.S. through the Development Finance Corporation, the Mineral Security Partnership, and also what's called the Partnership for Global Infrastructure Initiative, which is the Biden administration's big push that is supporting the Libido rail corridor in Africa. So a lot of increasingly important stakeholders, all with the mutual and collective interest to see Kabanga into production as a success story. So really, we're in a preferential position as a project, having these types of stakeholders supporting us both financially and strategically. Okay, so I'll wrap it up there. I think, so where are we? We are really at this inflection point. We're commercializing our know-how, our technology. We're doing it with who we think are some of the premier partners in the industry through Barrick or through BHP and then Glencore. And for us, this is really only the beginning. So we intend to demonstrate our know-how, our expertise in this space to provide clean processing solutions to mining companies and projects around the world. And there is probably a pipeline of another 15 projects that we have that we can tackle in this next phase of growth for our company. So I think with that, I'll stop there and I'll open it up for questions from Taylor in the audience.
Perfect. Thank you very much for the great presentation, Chris. So now we'll turn to the Q&A portion of the webinar, and just a reminder to everybody on the line that you can type your questions into the chat at any time. That said, we have some that have come in already. I think the big one here, just somebody asking, when will the DFS be released? And assuming BHP takes 60%, can you walk through the impact on the stock?
Mm-hmm. I'll be a little bit careful on this one. We're very close to making an announcement of the DFS, so I'll have to be very limited in what I can say there. But when you look at our guidance as to when the DFS was coming, we're getting, we're kind of right there. So I would say, we'll be making announcements as soon as we can. I like that question on the impact on the stock, because I think when we went listed last year, we made a very specific decision to, we came public, as I said, we came through a SPAC structure, and I think we were one of the only successful SPACs regarding post de-SPAC trading, and we brought the SPAC at $10. We traded quite well, and then nickel prices, we're under $10 now. But I think when you look at, we priced our listing valuation essentially at BHP's last investment round. So we made a decision, said, okay, we want to trade well, we want to leave value on the table to investors, and we want to price this to trade decently in the market. We're not going to try to make the mistake of shooting the lights out in evaluation. So that was successful, and I think we've demonstrated that worked. Now with nickel prices weakening and the stock being below $10 in and around the 6.5 range, that gives an even exceptional opportunity for investors to invest below where BHP invested. And when you look at where they're going to have to invest to get to 60%, obviously that's going to be based on discount rate, nickel prices. But that really, when BHP invested, they invested at about a 0.2 NAV. We're probably trading at about a 0.1 NAV. In our agreement, they have to invest at a 0.7 NAV. So that's where we have the impact on the stock. You can do some quick calculations. But what we have as a stock is a demonstrated pathway for investors to get in at a discount to where BHP invested, not factoring in the partnership with Glencore, not factoring or adding any value for the technology, because I think we trade solely on nickel prices. and I think we trade solely on the valuation of Kabanga. That's just where we are as a company until we're further along the growth curve, and we're more commercialized. So I think if you want to invest in best-in-class ore bodies, you want to invest at the bottom of the cycle. I think that's exactly the rationale that you saw out of Rick Rule and Harry Lundin was, and Rick was very vocal about it when we made the announcement that he invested. I buy best-in-class assets at the bottom of the cycle when I can. And I think that's a great way of looking at Kabanga right now, and the valuation of Lifezone stock being, discounted at this point in the nickel cycle. I think it's a great entry point because you can make a bet on nickel prices, and with all the nickel mines closing right now in Western Australia, we're working through the commodity cycle. You're seeing supply come offline. That's going to work its way through. You're going to see, the current supply coming out of Indonesia slow down. Nickel prices will turn in the coming years, but at the same time, we also give this quantifiable pathway to go from current NAV now to where it's contractually agreed that BHP will have to invest. And this is public. This is in all part of our listing. I don't know, Evan, if there's anything else you would want to add on that as well.
No, I think you covered that pretty fully. So,
okay, perfect. So maybe just in terms of Tanzania, obviously the government's quite supportive of the project here. Mm-hmm. Maybe I think there might be some investors out there that aren't really familiar with kind of changes in the jurisdiction. They might know that Barrick had issues in the past. Yeah. Essentially, maybe just kind of high level, what's changed since then. And as I said, they're clearly, the government's quite supportive of Kabanga and getting that into production.
Mm-hmm. Yeah, I think to the credit of the current President Hassan, when she came into power, really as a result of the previous president, Magufuli, passing away essentially due to COVID. But Magufuli took a very hard hand on the mining industry to really get them to pay their fair share of taxes, and that really manifested itself through the extensive negotiations with Barrick to kind of reset the playbook in Tanzania. And I think what Bristow and the Barrick team did was really come in and say, okay, we're new management here at Barrick. We know Africa. And they designed this partnership model, which for them is manifested in the 50-50 formula that they have. And that has resulted in kind of a redrawing of the overall relationship with the mining industry and Tanzania. The spirit of this 50-50 agreement is really an equitable sharing of benefits, which naturally kind of levels out around that. Anyway, when you factor in Tanzania is now a vested partner in the project. So they have a 16% participation in the project. So they're no longer just a toll collector and an income tax collector. For the first time now, you're seeing Tanzania take a vested participation by participating on boards, having an equity interest, thinking more like an investor. And that changes how you think about things, because you want to see projects go into production, because your natural benefit's going to be through the revenue generation, dividends. And so it has transformed the actual industry. And so now we're in a much more positive, chapter in Tanzania, and led by President Hassan. I mean, it's a great story she has. She's the first female president. She's the first Muslim president. She's the first president that is from Zanzibar. All these factors put her in a position where she has really embraced international investors. She has gone in a very investor-friendly policy initiative, and you're seeing a lot of that trickle through into the industry now. You combine that with the commitment Tanzania has made to infrastructure investment over the past 5 years, and the key ingredients are there. So investor-friendly policies, the enormous commitment to infrastructure, and I think that's also you add in the mineral wealth that Tanzania has that has not really been tapped into as a kind of new up-and-coming player to develop a lot of these new sources of battery metals. They're in a very, very strong position to be a leader right now in East Africa, and I think that's to their credit. So very, very investor-friendly environment right now in Tanzania, and I think you're seeing that. When you look at the interest from investors, you look at the number of projects that are coming online now. It's really a resurrection of the entire sector.
Great. Okay, and you mentioned that the government has that equity interest as a direct partner, and obviously they collect the taxes and such. Do they have any rights to offtake or anything else?
No, the offtake is really for the private entity for the company to determine what is where can the company identify and place the metals in the most optimized economics possible. So I think government takes it's a passive participation. They do have board representation. They are a shareholder, but really it's the job of management to identify where they can get the best contractual terms for offtake. And I think that has been the standard in the industry as well.
Great. Okay. We have a question here. I'll just read it out here. What is the current timeline for project execution? Will the execution be rollover to the current DFS consultants? What is the Tanzanian local content requirement strategy?
Sounds like it's one of the consultants asking this question. Yeah. I think the expectation is we would really transition pretty quickly here. Once we announce the DFS, there's a desire to really kind of roll into the front end engineering design. We would like, given where we are, we would like to maintain quite a lot of momentum in the project. So I would, I very much, from my perspective, don't want to have any gaps in timing to ensure that, number one, specifically on some of the real important priority work streams. So, and that comes down to resettlement, that comes down to livelihood restoration, relocation housing. These are a lot of the work streams you'll see us commit to and really focus on as the immediate priority spend in this next phase. But I think the DFS consultants, that's something we're in discussions right now. I think we had DRA as the lead independent engineer primarily working with us, and I think we've been really, really happy with the work they've done. So discussions are ongoing. In terms of the question on local content, so this is something you see this around the world. Governments intend to try to maintain as much participation from local companies as possible. Now, that can sometimes be cumbersome and bureaucratic, and I think Tanzania's local content requirement is something it's relatively new, and these policies tend to be a little clunky at the beginning, but I think they're working through the streamlining of how these actually are executed and managed on a day-to-day basis. So we actually have a very close working relationship with the Mining Commission, and anything we need. We're at a phase where we've had several large contracts for the DFS. Now we're going to be transitioning into a very large construction series of contracts. That's a lot of different consultants, employees. So it's going to go into a different phase. And so we've been negotiating and talking with the government how we could optimize and streamline this process. And they've been quite receptive. I think their interest is pure in that they want to make sure we're not bringing in hundreds of foreign contractors. We know the underlying intent of the law, and we're supportive. We have 96% of our labor force and management and Tembo team is local Tanzanians. So we have a demonstrated track record of maximizing the local Tanzanian labor force, and we would continue to do that as much as we can, and that'll be compatible with the local content policy. Yeah.
Perfect. Okay. Okay. Yeah, we had a question come in Spanish. My Spanish is a little rusty here, so I won't be able to ask that. Another one here. Do you consider sourcing nickel, copper, cobalt concentrate outside Tanzania for the Kabanga refinery?
Yeah, no, it's a really good question. There's definitely a shared vision we have with the Tanzanian government, which is when you set up kind of a beneficiation hub, and what Tanzania describes the Kahama refinery complex that we're setting up, they actually call it a multi-metals processing facility, because they do embrace this larger vision of other metals being produced there in this expanded industrial complex that can host different refining circuits for different metals from different mines in Tanzania, but then also regionally. And I think when you look at a good example is the the commitment by the African Development Bank to support the railway extension into Burundi, that goes right past some of the larger ore bodies in Burundi, the nickel ore bodies, some very large laterites, and that opens up the opportunity for, say, Burundi, for a regional country to also send material to Tanzania. And these are part of discussions where we've looked at more longer term. But I think when you set up a primary beneficiation hub, and I think that's Kahama will be initially solely focused on Kabanga's material, but we could add on additional circuits for additional material from Tanzania and other countries, and that's something that we would definitely look to in the future to take advantage of the full potential and scope of this special economic zone that's been set up. Because special economic zones, when you have one operation running, it's going to attract other opportunities. I think you have stranded projects, stranded economic assets that just are not viable from a commercial standalone basis. But if they have a regional processing facility, so they don't have to send a concentrate around the globe at very heavy cost, and you receive low payabilities, by being able to process it in a regional setting, that does change the economics. So I would envision in the future we'll have a number of discussions about what other ore bodies we could process in this zone.
Okay, great. Okay, so we have a translation here of that Spanish question. They're wondering if the conflict in the Middle East will have any impact on the project and developing it. Maybe just if there's any other macro events that might be on your radar that might impact project development.
Yeah, it's a tough one. I think the immediate correlation you'll see discussed is, if we do have an escalation in the Middle East and you do see oil prices rising, is that going to increase the cost of ICE vehicles? Would that kind of slightly have the pendulum shift towards EV demand because it'd be a cheaper source? These are very hard to predict, but I think the immediate, if there was a real high spike in oil prices and that translated through to really increased gasoline prices, I think you would see a little bit of very hard to determine how much of a quantitative change you'd see in EV demand, but you would have to expect some. I think that would be one. I think I think when you look at the commitment we have from these new strategic stakeholders, I think that does minimize geopolitical risk. Having the U.S. government come in and commit to going through the process of getting us applied for political risk insurance, that's a pretty selective product, and to have essentially the potential to underwrite an equity investment. So if I'm a shareholder in Lifezone Metals and the U.S. government can come in and provide a role underwriting the sovereign risk of a project, that dramatically alters how I would view the value of the project and how it's de-risked from an investment standpoint. And then you see the U.S. government also expressing interest to be a lead project financier. Well, that should have a positive impact on the equity, because we should be able to bring in cheap project financing relative to other alternatives. And then if we're able to see through negotiations with JOGMEC and those negotiations, that's another stakeholder that could bring in additional Japanese participants, and they have a very low cost of debt. So I think these will be, we'll provide more information to the market when we can. But these are some of the things that I think de-risk it from a geopolitical standpoint.
Excellent. Okay, so I don't see any other questions that have come in, so maybe I'll just put out a final call for questions and let you, Chris, maybe give the audience any final thoughts or a final pitch before we sign off here.
Mm-hmm.
Okay, one came in here. Would you be considering sourcing from ASM producer?
ASM?
Yeah, I'm not sure what that's referring to, but
maybe just clarify what type of producer that would be.
Yeah, if we okay, nothing's coming in here. So maybe if you have any final thoughts, you can just go ahead and let the audience know, and I'll sign off.
Mm-hmm. Yep, I appreciate it. And thanks for having us. Artisanal small scale. It's the potential. I think it's not something we have really looked at seriously as of yet. I think that would be a complementary feed to a large scale production, which is what we're focused on right now. So I think more on the gold side, if we were to put a gold circuit to process refractory gold in Tanzania, which is something we have looked at before, we could naturally feed in some of the refractory or sulfidic material from the region. So definitely something in the future we would consider, not right now at the moment, as we're in the development stage for the larger Kabanga project and refinery. No, thanks for the question. I think to wrap up, I think I would go back because we have hopefully a number of investors interested in equities. I think our equity story is really getting into these premier world-class assets at the bottom of a cycle, and I think that's really the story. And I think to get in at this level where you can get in at a discount to where BHP's invested $100 million, that's a great compelling opportunity. I think, and I think our ability to demonstrate to the market that we're bringing in the stakeholders that are going to put us in a position to see this project through to production, having a world-class partner like BHP, having these big strategic governments take a vested interest in seeing these projects progress and be successful, having a cooperative government in Tanzania, and knowing that this is Lifezone demonstrating the ability for us to commercialize our know-how and look at all the pieces that we've been able to pull together successfully. We're on the next stage doing that with Glencore in North America. And as I said, this is us just getting started. So I think there's a tremendous amount of value that's not captured and reflected in our stock. It's up to us as management to demonstrate that. Once we demonstrate it, we could be more valued on a sum of the parts basis, and to know we get royalties for all these projects that we commence. So for Kabanga, we have a dedicated royalty from the Glencore partnership. All the autocap plants we build will get a royalty. So we will be a royalty collecting company, which is another nice way to look at us from a valuation standpoint. So that's exciting. And I look forward to being up in Toronto next week.
Excellent. So thank you very much, Chris and Evan from Lifezone Metals, for taking the time to host the webinar today with Red Cloud Securities. And thank you to everybody on the line for tuning in with us.